Well, Evercore ISI warning investors December will be a season of surprises. Julian, the firm's senior managing director, is behind that call. He joins us now. Julian Emanuel, by the way. It's not like Cher.
We call him Julian.
Right.
He's got a one-name thing around here.
Right.
Yeah.
Julian, that we should be concerned about. Season of surprises sounds wonderful, actually, except when it comes to the equity market. So what's happening here?
So today is actually a perfect day to describe what we're talking about, right? The tape traded poorly all day, broadly soggy. And surprisingly, the semis were good, and lo and behold, we get this news after hours that is a surprise, and we see the semis trading better after hours. But the point is that if this were not December and you hadn't had September and October and in November that squeaked out the gain to keep the record intact, the VIX would probably be 30% higher, given the fact that we have all this event risk in front of us. I mean, the Fed and, the central stock reporting on Wednesday, that's the crucible of the debt concerns around AI, all of this, and then followed by 6 days later by employment data that, for goodness sake, shouldn't we have had the Fed meeting after the employment data? All of that really says that the market is not prepared for surprises. They could be good. But in general, this kind of volatility is likely associated with a little bit of downside.
This week and next week, the last full weeks of the year, can you be long volatility knowing that the back half of this month, they're going to be a couple holiday shortened weeks?
I think you can because, look, again, there are other events out there in front of us. The dialogue around Russia has been going very poorly. Venezuela is a hot spot. And then, lo and behold, we get to January, and we're going to start talking about a potential government shutdown at the end of the month of January, which, again, is normally a very positive one for stocks. But all of these suggest that, particularly given the run that we've had, and, of course, we think next year's positive, but things don't move in a straight line forever.
So, Julian, is the Fed going to be a surprise at all? Where would the surprise come from?
So we're a little bit sort of out of consensus on our view here. And simply, if you think about it, right, the labor market is just an enigma wrapped around a riddle.
Sounds like Russia.
It totally is. You had continuing claims, the weekly claims, very low. At the same time, you had ADP negative. And so in our mind, what could actually be an unexpected surprise is if Powell actually sounds a little less hawkish than the market's expecting, and you could get one of those, sort of what do they know that we don't type of reactions. I just think that at this time of year, if you get news that's outside of the realm of expectations, and consensus is very strong around the Fed, that, you could have some volatility.
But is this volatility confined? Will it be, in your view, confined to December? And then January, it's sort of, we're looking ahead. You're still bullish AI-centric names, and so therefore there's a certain amount of bullishness still baked into 2026.
No, absolutely no question. But again, the other thing we have to remember is that at these valuations, the slightest little upsets, as we saw essentially at the end of October and the beginning of November, caused the market to pull back. But in the larger scheme of things, in our view, earnings is still very strong. The monetary and the fiscal tailwinds are very much there. And we think the capital markets have further to go. And all of that drives upside into 26.